Welcome back to Alpha Recap, your end-of-day market wrap from stockalpha.ai. Energetic day, Tyler. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Big themes today. AI commercialization headlines and energy price tightness really drove the tape after markets closed.
Totally. Okay, quick top line. Nvidia announced roughly $40 billion in commitments for 2026, with about $30 billion tied to OpenAI. That was the headline that set off a lot of the tech focus.
Yep, and OpenAI's revenue chief said enterprise AI is at a tipping point. That line turned a lot of academic talk into a near-term commercial narrative.
So, what really stands out here is how those two pieces together reframed flows. Concentrated gains in a handful of tech leaders, while commodities like oil and diesel kept cost pressure on other sectors.
Exactly. JPMorgan flagged Brent crude could stay above $100 a barrel into 2026. In the snapshot, it was trading around $107 a barrel, and diesel was near record highs. That fed through to transportation and consumer cost concerns.
We also had some corporate micro headlines. United Parks and Resorts missed on GAAP earnings per share, negative 69 cents, missing by about 38 cents, and revenue was about $278 million, roughly 1.3 million short. Procter & Gamble was down about 9% over the last 3 months on margin pressure despite broad sales growth.
And then there were the concentrated winners. Intel showed a big coverage boost, something like 260% in that early-stage snapshot. And Moderna popped on early-stage work around hantavirus. So the tape felt very headline-driven and narrow. Hold on, say that again?
I meant narrow in the sense that a few names carried most of the gains, while the rest of the market was more mixed. Staples under pressure, retailers evaluated for cycles, and small caps getting whipsawed by earnings.
Right. And the other thing is, politics and regulation added another layer. FCC comments about Disney and reputational noise from CEOs traveling with presidential delegations created headline risk that can amplify volatility.
Not a great day for headline-sensitive stocks.
Yeah, that tracks.
Let's break this down. First, AI. Analysts are parsing Nvidia's commitments as more than capacity funding. They see it as an attempt to shape the entire AI stack: chips, models, cloud partnerships, and optical fabric.
Some analysts call it structural, a way to lock demand for compute and influence standards. Others think parts of it are opportunistic PR, big headline dollars that may or may not translate into proportional commercial revenue.
So, what really stands out is the emphasis on photonic integration platforms. Names like Poet Technologies were flagged as undercapitalized. Corning also showed up as a disclosed recipient. That's the glass and materials angle in the stack.
To put it simply for listeners, if Nvidia is underwriting the plumbing, they're betting the plumbing will be used. That creates optionality for suppliers, but also concentrates technological lock-in with a few partners.
And OpenAI calling enterprise AI a tipping point gives analysts more concrete inputs: partnership structures, revenue share ideas, to model early monetization, even though OpenAI itself isn't public.
Importantly, a lot of the near-term wins in healthcare are operational. Vendor case studies are reporting declines in claim denials of about 20 to 40%, and coding time reductions of over 50% in some pilot sites.
But analysts stress these are vendor-reported and site-dependent. Clinical AI, diagnostics and treatment decisions, faces higher safety and regulatory bars, so back-office automation likely moves faster.
Exactly. So expect faster commercial returns in billing and coding, and longer validation cycles for clinical applications.
Now on to energy. JPMorgan's call on Brent above $100 is significant because sustained high oil supports producers and oil field services. But it raises input cost risk for trucking, agriculture, and retail.
Diesel matters more than people think. It's the fuel for trucks, trains, and farm equipment. So price pressure there tends to be broadly inflationary. Companies with pricing power can pass costs along. Others face margin compression.
And that feeds straight into consumer price dynamics. Analysts say fixed income and income investors should be mindful of elevated inflation risk from energy. Powell's Fed legacy and political pressure complicate rate expectations too.
On concentration versus dispersion, the market closed with concentrated leadership, tech and select biotech, while staples like Procter & Gamble showed margin squeeze. UBS also flagged a potential mid-2000s style repair wave that could influence home improvement names.
Quick reaction. Wait, really?
Yep, home improvement demand cycles can be structural and give names like those a defensive angle if the thesis plays out. Let's touch on the debates. First, optimism versus guardrails on AI. Optimists point to vendor-reported productivity gains and big strategic capital as acceleration forces. Skeptics note uneven returns, self-reported metrics, and regulatory or safety hurdles.
So what really stands out here is the need for independent validation. One or two vendor stories aren't a market-wide proof.
Second debate. Is Nvidia's $40 billion strategic or opportunistic? If strategic, it locks in demand and shapes standards. If opportunistic, it creates headline risk if partnerships don't scale as hoped.
And third, energy's macro signal. High prices invite supply response or demand destruction. Analysts warn the timing and magnitude of pass-through into earnings is uncertain.
Big move.
Let's translate this for different investor types. Long-term growth investors. The AI stack is structurally important, but analysts say watch actual commercialization KPIs, revenue shares, enterprise contract lengths, compute utilization, not just headlines.
Income and fixed income investors. Elevated energy prices and political pressure on the Fed complicate the inflation picture, so duration and real yield sensitivity matter. ETF flows suggest demand for active management is rising.
Event-driven and active traders. Concentrated leadership and regulatory headlines create volatility and potential catalysts for trades. Earnings misses like United Parks and Resorts or beat and raise scenarios can move small caps fast.
And sector allocators. Energy producers and oilfield services may benefit if Brent stays high, but transportation, agriculture, and consumer discretionary face margin risk from diesel.
Honestly, I was a bit surprised by how many moving parts there were in a single day. Macro, tech, commodities, and politics all lining up.
Same here. So what should listeners put on a watch list? Monitor concrete AI commercialization metrics, independent healthcare AI validations, diesel and Brent price trajectories, and Fed-related political signals.
And for event-driven folks, prioritize liquidity and scenario planning. A beat and raise can quickly re-rate expectations, and misses can compound into downgrades.
Before we wrap, a couple of quick takeaways. 1. AI is clearly moving toward commercialization, but pace and distribution of returns are debated. 2. Energy price tightness is an immediate margin risk and an inflation input. 3. Headlines in politics can amplify volatility, even when fundamentals don't change immediately.
Short and sweet. Final thought?
Analysts broadly agree on the themes, but disagree on timing and risk. That argues for active monitoring of the discrete data points, commercialization KPIs, guidance and margin disclosures, and commodity paths, rather than blanket sector bets.
If you want to dive deeper or ask us about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Markets closed with very specific crosswinds today. Stay alert, and we'll bring more context tomorrow.
See you next time on Alpha Recap. And again, if you have questions about anything we covered today, go to stockalpha.ai and use the Q&A to ask us directly.